area here, notice all this area here is balanced, right? It's efficient. There's no FEGs, there's no volume imbalances, there's no ranges, there's no the gaps. It's all balanced. So there's really no point for the price to come back all the way back here, right? We have this green candle. This here is our order block, right? This here as a whole order block. So you can use the opening body, for example, and call it order block. But I wouldn't expect the price to come back there, right? I wouldn't expect the price to come back there. Why? Because all here is balanced. The price doesn't really have to come back to this. Some people will just wait for the price to come back to this order block. They will draw it like this. Oh, we're very bearish. Okay, I'm gonna have a 5-minute bearish order block here, so I'm gonna wait for the price to come back here, take my entry, and just never comes back there, right? Because here is sufficient. It's sufficient. Also, what do we have? High, higher high, lower low. This here becomes the breaker block. Bearish breaker, right? This stuff you want to see. You want to see this be respected. And if you don't know how to draw it, just use this. It should draw it out for you. Give it a second. There you go. Now, so you can, if you were trying to look for a long, you try to find maybe an entry anywhere inside this breaker, but maybe exactly at the breaker and aim for 5 points at least. Let's give you 7 points, which is great. And you can take that trade there. So the midpoint of this midpoint of this bearish breaker block becomes important for us, right? Where's the midpoint? It's a potential entry, and I might act on it, to be honest with you. I'm acting. So this here would be a really nice entry. You can see the price respecting this. I want us to stay below the 50%. And I in fact I don't want us to come back to the 50%. It's just to show you how bearish it is. If it comes back there, you can find it as resistance and continue going down. But if we don't even reach it, that's even good for us because the price is so bearish, it cannot even come back to the midpoint. Not midpoint. Well, midpoint is the same as consequent equation, but for FEGs, breaker blocks, volume imbalances, we call the midpoint is consequent encroachment, CE. Okay, but for order blocks, it's mean threshold, NT. All right, so you see, we're still failing to come back to the midpoint of this. This just shows bearishness, right? So you could have had any entry here, so and target it here. I'm personally already up 130 on this trade and 300 on the other, right? So it was on CL. I'm going to go over that in a second. I told you guys to enter that trade. It was a really nice trade. But you can see we didn't come back to 50%. See how you can, if you're very bearish, as we are right now, we expect the price to not come back even to the midpoint. You can see. Could have had your entry anywhere here. Where do you think the price come back here? It never comes back to random place. If you couldn't come back to this, if we're very bearish, the algorithm will not allow the price to come back to the midpoint, right? So it will allow it to come back to where? This here is a wick. This wick here is important. Acts like a PD array. This is a PD array. It's like an FUG. Take the midpoint of it, and you can see the price just came very shy of this midpoint of this, right? So we're not even able to come back to this to the midpoint of this wick, let alone the midpoint of the breaker block. So you can see how bearish we are. There's really no reason to go long. And if we start disrespecting this breaker block, the midpoint, and this wick, for example, you're in a trade short, right, and you get stopped out, then you can start to look for longs. Immediately, you can start looking for longs. You were not stopped out. I promise you, you were not stop hunted, right? Because we are the ones doing the stop hunting, right? We are literally the hunters right now. We are literally the hunters. So something would have been like this, stop loss maybe at the top of the breaker, and you can target the NWG, right? Just like we did in the morning. I don't know if it's going to take it now, but it could really do it because right now we are from 910. Where's 910? 950, sorry. Actually, let me just go ahead and turn this on. You can see we have a macro, right? Come on, baby, load. All right, see, we have a macro here. Let's see if I can give it a name. I don't know if this is the name, but this macro ends at 1010. So pay attention to what it is. So you can use this to get your entry, right? From here to here, there's something gonna happen. We're gonna run to hunt liquidities or fill insufficiencies. Right now, we don't have any. So, and this the 950 to 950 to 1010 is expansive. It's expansion kind of macro, right? The rest are all accumulative. This one is expansive. So I expect big, strong movements, right? We can drop to the 1 minute and have a look what's going on. Oh, you can see 950 to 1010. We have the macro. But we expect the price to come back to NWG. So that would be our target. It's going to might spank all the way there in the next 15 minutes, right? You can watch it. Normally, any other macro, for example, this macro, it's a cumulative. What does accumulative mean? Accumulation means running stop losses, right? Because you can accumulate orders from people stop loss. So here we are longs, right? We are longs. As soon as the macro started, we went down all the way down to take out these low and this low. So we swept these liquidities, all these cool lows right here. We swept them all. Everybody long in would have the stop losses here. Retail mindset would think, oh, we were going up, down, 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 down. So here we just engineered liquidity, or we engineered the fact, not the, we engineered the mindset for the retails to think this is support or the demand zone. We went down, took these out in this macro. Once since this macro finished, we continue up. You see, during this time we ran liquidity, right? 950 on the other hand, it doesn't run to liquidity. It doesn't run to on liquidities. It just expands to its objective. In my opinion, the objective again is the NWOG. We derive this while we are here, we close below the midpoint from this NWOG to this one. Okay. Now, most of the folks would think we had this opening week, new week opening up yesterday. This one here, and the price went up. Now it filled it. Now we're done with it, right? No, we're not done with it. We will still come back and revisit it, right? This blue line is the midpoint. You can see how price is respecting it. We'll come back to it soon. No one. But since here is another gem I want you to try and since this NWG was based on a holiday, the New Year holiday, I wouldn't care too much about this NWG. In fact, I might remove it. Right? Same thing with FPGs, same thing with order blocks, same thing with anything. If there's news involved, I wouldn't use such gaps. I wouldn't give them too much attention because they were not part of the algorithm. Those holidays wouldn't allow this algorithmic reference point to be used as it should, right? But these ones here from even, for example, this one, this is this week's, right? Like yesterday, it was formed. This one was formed last week. This one was formed 2 weeks ago. These two here are much stronger than this one, which is fresh, right? So let's have a look. We are still here. Look at this candle. Again, take your Fibonacci, and you want to see what price does it this week. Now, why did the price come back here 3 times and then go up? What is here? What is very special here? Well, I told you in the chat. Oh, I told you guys in the chat 73, I think, 76 and 73 are potential roadblocks or reversal areas. You can see price came back to 73 and start pumping from there, right? Now, that's not wizardry. It's just there is something there. We have a 15-minute. Let me turn off the sessions because it gets a bit annoying. Here, we have FEG, right? 15-minute FEG. We also have 1 hour FEG, right? We have this FEG. But what is really at 73? 73, we have this order block, right? And the midpoint of this order block, I can draw this out. Yep, is actually this. Maybe I didn't draw it correctly, but it's plus or one tick anyway, right? You can see it just came back to respect this order block, right? It's a reference point. The algorithm will allow the price to come back all the way down into discount, very discounted area. And this is one of the earliest discounts that we can act on. We respected it. Now we expect the price to respect it if we're bullish or disrespect it if we're bearish. We came back to it and we had immediate rejection back. You can see this look here, immediate rejection back. We had this displacement up. I want us to see, because the price came back to it with an immediate rejection up, come back to it with immediate rejection up. Now we found another breakup. We're breaking out. Now we're starting to disrespect the bearish things. This is the bearish FPG. It's in the premium. If I take from here, this is 1 minute on the 1 minute, by the way. This here is in the premium. So I want to see if we break above it, then okay, that's the first time we broke any premium PD array, and we can try to start forming our longs based on that, right? So let's keep that on. Go back on the 5 minute. Then it should look something like this, right? Come back on the 1 minute. All right. So what you can do is you can actually start planning your trade here, right? You have on the 1 minute. It's on the 1 minute. Where is our Choshes? Oh, there is. We have a Chosh. We have a Chosh. We have an FP, multiple FPGs. We have this breaker block. We're still holding this bearish FPG. So I want us to close above it, come use it as retest, and then try maybe to find an entry targeting where? Targeting somewhere there. So this here, we're still in this macro, right? So I expected us to expand us up all the way down here, but instead it decided to go the other way, right? Why? Because if we're bearish, if the drawn liquidity is bearish, we would go here straight away. But since we came back in your support of the 15 minutes order block and FPG, that bias can have changed, right? So you have to keep attention. Let's see what's happening now. This FPG is still being respected, so you can absolutely come back and go all the way down. But this displacement here is what I'm looking for. This displacement is what I am looking for. Look here, do you see any similar displacement? No, look at this. It took hours to get back in and out. Here, it took it in 2-3 minutes. Right now, here's our first sign. This candle closing 40 seconds above this. We can use this FVG as an inverse for us to continue going up. Our bullish breaker block. Go down, right? So if the price comes back up, you can use this as an entry, right? And of course, you can use the whole thing because it's consecutive. You can even use this one. Now, suppose you didn't use this anchoring point, right? You can use this low, lower, low, high, high. It still gives you this same thing. Why? Because from here to here, the highest green candle is this, right? It doesn't matter which low you use. The worst case scenario is you will get two better breaker blocks. So let me come back here. All right, we got the momentum. We had higher time frame respect, PD area respect. Sorry, order book respect. So now, if we get a Chosh and a Fiji, I might act on it, right? On the 5 minute. Here's our sessions. If we get it here, we don't have an entry because a Fiji one here. We break above this high here. Most likely, we will get a what? Chosh. But if you drop on the 1 minute, you can start planning earlier, right? So I have this FVG here. I'm gonna start and turn this off because it's too much on the screen. And here is our breaker. So why did Algor choose this breaker? Because we have low, lower low, high high. The highest one is this, but we are able right now because price is here. But we still have our eyes on this one. So low, lower, low, high. We can also have a breaker over there. So here's can be a potential entry to target 2RR. And then if we get 2RR, for example, that's 15 handles, right? That's too much. That's absolutely too much. You can be targeting NWG, but right now, what we do is we wait for the 5 minute to form our candle with a Chosh FPG. This is a good displacement, but we still didn't leave this range. Also, what's Dixie doing? Dixie. What's this? I forgot what this is. This is the daily fair value gap. So this is not moving, it's consolidating. Why? It's normal. After big moves, after a very big move, the market will start to consolidate, right? So this makes ES still go to its objective, but slower. And in my humble opinion, I'm still looking for in this individual to be taken. We can have little retracement up, but this movement here was good. But I wish this movement here would have just got us out of this range. So break this high, right? Because right now we just on the 5 minute it doesn't look too good, but on the 1 minute it looks very nice, right? And now notice, guys, I told you this fair value gap is the narrative. We're still respecting it. Look at the bodies, with the exception of this one. Look at all these bodies. Wicks can do the damage, bodies tell the story. So I want us to get like strong spaceman out of this candle, retest it. Right now, what are we doing? We are at the midpoint to detect, boom, boom, of this. So we're trying to use this as support. Let's see if we can do so. And if you want to do so, how do you know if it's true or not? In the next 2 to 3 minutes, I want us to see a big movement up from this. Otherwise, it's not. Okay. Mhm. Also, here we have a bearish FVG, bullish FVG. Here is a balanced price range. Okay. So this FVG here is important for us. Still watching. Still holding the 50% of this. This displacement is very good. So, Josh, we can pick from the swing low to the swing high, extend it out. Let me remove everything. Annoying. From the low, this is the first swing low. To the high, it's the first swing high after the Josh. These FPGs here are in the discount. These ones I want us to respect. This one and this one can get wrecked. I wouldn't even give a single damn, okay? These two here are our potential entry points. Yes, I'm on the 1 minute. Here is good. Why? Because we're in the discount. I even expect this FPG here to remain open. But so if you would look for longs, you would do something like this, right? Maybe target the side 2 hour. That would be very good. Right? I still favor the bears. And that won't change. That's why even if I get a good setup, I won't take the long. But if you're looking for a long, this is how you can trade. So let's see if what I said is correct. If the price comes back here, it should respect this FPG and hopefully we'll leave this one open. And this we call it breakaway gap. And I'll take this from here, from this window to the end of this FPG and multiply it. We would expect the price to come back all the way here, which it did. Why? Why did I say that? Because this FPG is near, and I'm going to be speaking more about it. It's near the equilibrium. So this FEG becomes a measuring gap. We get into more of that next in this week. They're really important topics. Breakaway gap, measuring gap. Yeah, you guys thought it's only FEGs, right? Bullish and bearish. There's at least 20 different FEGs. But yeah, technically we're still super respecting this FEG, right? So everybody that's trying to plan their longs, they didn't pay attention to this FEG. And this is on the 1 minute, but still. You can even go on the 15 seconds and check. Is there are the bearish FEGs being disrespected? Well, do we have any FEGs here? This one. We can't respecting it. All right, that's bad. You can see we're still respecting. And I'm on the 30 seconds, guys. I'm on the 30 seconds, and they still don't respect. So, so as soon as we make out this high, strongly, form an FVG and a chosh, come back to it, we can take along maybe maximum to here, or the midpoint of this whole range from here to here. Will be somewhere around NWG, this FVG, which is also in the premium. So that would be a really good target. You can see we have NWG, we have equilibrium, we have insufficient inefficiency right there. It's FVG. You can target that. Most people use FVGs for entries. You can use FVGs for inefficiencies or insufficiencies for targets. If I'm on a long, I can target this bearish FVG and call it a day because it's not just for entries, right? It's not made for entries. It's an area where the price will want to fill after taking liquidity, right? So we're chilling here. Like I said, NWG is a micro set, and if I find a setup to go to this NWG, I will take that setup. If the price starts to continue up, and even if it goes all the way back up, I wouldn't take the trade. I'm not taking 50-50. Right? My bias is short. I'm only gonna act on the short. If I get a long, if my bias gets disrespected, I would not take the trade, right? Because we're not chasing the price. I would just wait for the PM session, right? I'll get much better there. All right, so Dixie. Dixie's not moving. Because remember, what did I tell you guys? You don't want to be trading when there's no news. We don't have news here. No news days. Normally it's Monday. That no news Monday, but Tuesday we can't go for the video. Yeah, so and so on Tuesday, on today we have no news. So if there is no news, you don't trade. Why? Because the market is it's not efficient. It's very inefficient. I don't want you to be trading the news themselves, right? Don't trade the news themselves. But you want to be trading on days where there is news. Because the market will become efficient. We will start going to this target very, very fast. Look how close we are to the NWG. We're just chilling here, right? I would ask if it was a news day, we would come back already right there. And it doesn't have to be at the time when the market drops the news. It can be before or after even. It will still be efficient. I'm not saying it will be efficient as soon as the market as soon as the news drops and then there will be a pump and dump. I'm not talking about that pumps and dumps. I'm talking about the market will move to its target like air. So this comes in banned here. Need to download VPN. Bruh, how is it banned? It's in the community part of AMD. Buy program may kick in. Wick down is manipulation, but we have overall fair sentiment top long. Well, Vicnet, what I always tell you, if you can justify both longs and shorts, don't take the trade. Don't take a trade. Come back in the PM session. Right now, I can. What can you say about the chart right now? Right now, you can say we're very bearish, right? We're still very bearish. We're even respecting this 1 minute FVG. 1 minute FVG is holding us for the past 15 minutes, right? And we have a target here, right? We have a target here. So it looks bearish to me. Yes, we have a sweep. Yes, we have a chosh. We don't have an FVG. We don't have a big displacement up. Like, for example, today on CL, let's have a look at CL. I should start closing because there's so many NWGs. What did we do? In London, previous session high was swept. So we finished short and we acted on it. We swept it. Josh, very nice. I wasn't awake for it, but I took this trade. I wasn't awake for this one, but here we took a short. We got Josh. We got an FPG. There's FPG here. And you could have targeted these lows over here, right? This move, don't underestimate it. This is CL. From here, from your entry to here, this is $370, right? $250 should be your daily target. Here's $370, right? It's not like NQ. How about CL? Sorry, how about today? So we had sweep, Chosh, FPG. We had an FPG here, right? Price went down. It went back into this FPG. I took an entry. I got out at 73. I told you guys 73. Why 73? Because it's the equilibrium of this range. You see, it came very shy of it. So I closed my position somewhere here. All right. And then you can see, I've showed you guys in my trading rate. You can check again if the video is posted. Then when the price went back up, as soon as it came back here, I took another trade. I took another 2 contracts. And then this time I targeted exactly the equilibrium. You see the price came back to equilibrium. You can see to the tick. You can see price holding it until new PM session open. But why this area? Because CL took out its liquidity, right? It took out its liquidity here. It ran liquidity, and now it will do one or the other. It will run to fill in its unfinished business with FEGs. We have an FEG here. Everything here else is balanced. We have an FEG here, and we have equilibrium. So the price came back to these two. One bud, 2 stones. Sorry, 2 stones. Oof. 1 stone, 2 buds. We hit it there, and I took the trade. So you can probably see my executions. I don't know if it's on this account, but yeah. So I took 2 contracts here, went down, took it out, came back here, took another contracts here on this account, and on the other account, I took the same trade, but I entered here. Why did I enter again? Because this was such a beautiful entry. Why was it such a beautiful entry? Because we have sweep, church, very strong space candles. Look at the space candle, very strong space candles, which we don't have right now in ES. Price went down, we had an FEG. It was so strong. How do you know if it's a good church or not, or if it's the space? Well, if the church itself has an FEG, it means it was so the space. It left a gap behind it, and that's why we enter right here. You see. And however, what? High, higher high, lower low. Sorry, high, higher high, lower low. These 2 red candles become a breaker block. You can use the first one, the lowest one, but since it's consecutive and very small ones, you can use both of them. You can see the price came back, respected them. As soon as I saw price respecting, I entered on this candle. Not when it started dropping, I entered on this candle, right? I entered 2 contracts again. And then the next 2 candles, I was able to catch this whole move down, right? So you can see I entered right there and I got out here, right? Just before the 73. This move here, back to the equilibrium is 36 ticks. I was in 2 contracts, so $360 times 202 times 2 is 700 something, all right? Some 700 something, blah blah blah. I got out a bit earlier at $400, right? So just about 60% of my maximum target because I don't want to be greedy. I'm fine with that, right? And I was more confident the second time. Why? Because the price failed to come back to equilibrium and fill this efficiency. So it went back down into the premium to allow more accumulation of more orders at this FEG and this breaker block. And then boom, it went much stronger than this one. Look, this one was very bit slow. This one was much faster, right? That's how you can plan your trade, right? You can take data. Look, it's no longer invalid. Let's say you missed out this entry. You could have entered here for the first time, right? But I got more data. I came back here, we saw it restricted. This one I took another trade. You can still keep doing that, and you see price came back here. It took out these highs because there's also NWG. I didn't have that on my chart, but you can see price respecting NWG, and even on CL, right? Even on CL, this is that 75 point. It still respects that point as well. What do you think this is? This here is the 25. 0, 25, 50, 75, 100. Look at the bodies. Yeah. And it went all the way down to take out the lows. From where to where? From this NWG, to this one. And maybe even this one, right? Let's go back to ES and have a look what's going on there. Battery. Yeah, I still have 9%. Remind me again in like 30 minutes. This everything's expecting to be on top. Yeah, I'm done with CL, brother. But see guys, we were right that the price is gonna take out the slow, and people here were probably trying to make longs. I am not looking to take longs. The maximum I'm allowed I allow the price to go up. It's probably take out this high, fill this insufficiency, and continue going back down until NWOG, right? And then just like Friday, was it Friday? I think it was Friday. Price came back all the way from the top, all the way to the NWG, and it started reacting all the way back there until equilibrium, and we acted on it, and you could have acted on it. And since you learned it last time, just today, if this happens, you can take that trade right before it happens. Let's have a look what NQ is doing. Right now, there's really no reason to take any trade. So NQ took its target. NQ took its NWG. ES didn't. So that means ES doesn't have to, but it will. Let's see. I haven't opened NQ in such a long time. But Dix is chilling. If Dix is chilling, we should all be chilling. But notice how we're using this bullish FPG as a what? As a supply. No, it's for the bodies. All the bodies are inside. There's nothing outside. We're using it. Look at these. Look at the bodies. All of them down. We're using this bullish FPG as resistance. It's very nice. Not all the way there. Anyway, well, I told you guys earlier today, the market is going to be very, very boring. But maybe PM session would be nice. Told you guys it's going to be very, very boring today. Anyway, because we took our objective before market open. If this is right, listen, if we take the objective of the day before market open, the market open will be boring. If we don't take the objective before the market opens, then we would run to that, like, to the objective in market open, like this, without you won't even have an entry to enter, right? So yeah. Also, what do you have? We have accumulation, manipulation. We manipulated the highs, all these highs, accumulated, manipulated these highs, and then distributed. And now we in X, this X, it could do what? It could do one of the other thing. X can be continuation or it can be reversal. If we reverse, we come back to the midpoint of this range, which is the NWG. If we continue, which I wanted to do, we come back to the NWG, right? So right now we're doing the silver bullet timing, right? So where would you take a nice short setup, right? So if I'm still bearish and I want to take a short entry using the silver bullet, I would take which FVG? I would take probably entry at this FVG here. Or if on the 1 minute or 2 minute or 3 minute there's a FVG closer to that area, I would use that, right? Why? Because this one has a narrative. These two don't. It looks the VI from last week. Right. What choice then? You almost broke some shisha. You see, market is boring. Like, you don't change price. I told you the market is going to take out the low. I told you the market is going to be consolidating. I told you the market is going to revert to 73. If we get the displacement, which is great, we did not. We did kind of, but it was not enough to even take out this high, right? Why? Because this is still chilling. But notice here, we did form an FED. There, on this chart, we didn't. This chart, we didn't. On this one, we did. So that's kind of good. And we're still respecting it. So as soon as we get a chart, we can take, maybe, we can get a nice entry. But I'm favoring bears until the PM session, right? I'm not touching anything long. You can literally pump from here and make new highs, and I'll still not take a long. Until we come back to this NWG. These movements here are to trap traders. Also, I want to say one thing today. And write this, guys, in your note. It's a fresh new thing you never heard it before. It is called 3-drive pattern. Okay. One, two, three, drop. This pattern here is an algorithmic pattern that shows the market that the big guys are offloading their position. They will be shorting every time they pump. They will be shorting. They won't be shorting when the price is going down. They'll be shorting every time the price is going up. Price going up. They're offloading part of the position. The price goes down. That makes it forces the price to go down. The price continue going up. They offload another part. It goes down. They, the market goes up one more time, and they offload the whole position. And from this point on, it continue down. Right? It's very, very obvious to see this. Very, very obvious to see this. There was literally no other way to catch this whole move today. Not even because we have a sweep charge, but no, came back. Price never came back to this FPG and break. This here is a breaker block. Actually, no, this is the breaker block. We can do. This is also a breaker block. I think technically, once this price closed here, price went down. You could have re-entered at this FPG, but your stop loss would be really, really, really huge. I wouldn't even take it. Just call it a day. What you can do is once the price comes back to the NWG, start using it as resistance. For example, once it closes below the midpoint, close midpoint here, you can start looking on the lower time frames for any short entry. For example, a short LFVG. For example, let me show you. Let's start go on the 1 minute. Chosh FVG there. For example, here. We close below the midpoint of the line. Oh, it still shows it nice. We close below the midpoint of this NWG here. Great. Now we wait for a Chosh. We got a Chosh. Very nice. And got an FVG, but price never came back to it. Yeah. Couldn't take the trade. But high, lower, low. This here becomes a breaker block. And still didn't touch it. Oh my god, dude. I'm not gonna force this trade. I'm not gonna force this trade. So what's ES still doing, right? So these are 5-minute candles, guys. Up, down, up, down, up, down. Here it's from here to here. Let's say you in a trade. That's 2.5 hours, right? 2.5 hours you're trying to take along through here. Or to this high. Let's say you're just trying to aim to this high. Are you gonna hold your trade for 2.5 hours? Let's be honest. No. No. I get shit scared when I hold it longer than like 10 minutes. Notice my sale trade. I entered here and 2 minutes in the next candle it went straight to my target. I entered here in the next candle it went straight to my target. These are big moves, by the way. Right? I didn't wait in this closing area, right? So until we get what we want, until we get our strategy, it will not be that efficient. If the reason our thing works is because the market will be primed into an efficient performance mode, right? Ready for us to take a trade. There we go. Come on, baby, give me the NWOG. I'm still favoring a 5 more. That's 10 points. That's $500 with one contract. It's very close. Now, suppose we close below this bullish FPG. Let's say in the next 20 seconds, close below. We can use this as an entry to go short. Yep, you hit me right. We can do this. And if you get stopped out, you can try to find another entry above. Or you can put it like this. Right? You can do this. Absolutely do this. If the price closes below this thing, you can use it as inverse. And you can target 5 points. Always teach you go to 5 points. This is 5 points. This is $250 with one contract. Go with two contracts, that's $500. Right? Here it gives you the opportunity to take all the way up to 10, 500, right? $500. So you can do this. So it closed. Did it close? Yeah, it closed. So we can use it as an inverse. And I would expect it not to hold this area. Why? No, I don't expect the price not to come back to this area. I don't want it to. Why? Because we have an FEG, right? This FEG here, we might fill this whole FEG, but we will not fill this area there. Okay. Now, if I didn't take any trades in the morning, I would take a trade. But I showed you already, guys. I took 2 trades today. And I'm content right now. It's just watching price, right? So next time it happens, we can act on it. I want us to close below midpoint of this order block. Then I'll be much content. Oh, we already did. No, notice how we closed above it. This whole move down, it can in instant come back all the way back up with a wick, just like this wick here. So I want to wait 3 minutes and 40 seconds, right? This 3 minutes and 40 seconds, it can either come back to my TP, this low, maybe this TP, or it can come back all the way back up and make new highs. 3 minutes is a long time, guys. 3 minutes is a long time. The guys knows this. All the guys know. Jokes aside. I hope you're recording, guys. 0, please be recording. Spondy is there. Spondy is. Ziggy also records. I'll stop paying you guys to record. Noise. We have still 3 minutes left. Once we close below this midpoint of this order block, we are Gucci, my friends. Let's have a look on the 1 minute. On the 1 minute, we close very strongly below it. We use it as resistance. Resistance, great. This is great. This is absolutely great. First TP would be here. Next TP would be here. Ah, notice. We have this volume imbalance now. Price should respect it. We also have this volume imbalance. So you're going to see the price go up, down, up, down, up, down, up, down, up, down, until it breaks through. But this one is a bullish one. This one is a bearish one. Since we're bearish, we expect the bearish one to be respected and the bullish one to be disrespected. Well, this is also a bearish one, but we were above it. Price was above it. All right, now we're going to use this volume to support prices. We have this FEG. Notice that the body how respecting it. Notice. One minute and a half left. We already got the confirmation on the 1 minute, which is enough. But still, see how the price is working on this? You see? Look how we repriced it to the tick. This is algorithmic. Up here, what's the low of this candle? UI should be here. What's the low of this candle? 75.25. What's the open of this candle? 75.25. 75.25. 75.25. Right? We came back into this FEG. Came back down. Still nobody here. 40 seconds left. Price is allowed to come back only to this area here. I don't want us the price to go above this midpoint of this wick. I want us to stay below it. The price is allowed to come back maximum to this area. It can pump all the way back here. And you wouldn't be scared, right? Say you are entered where we said to enter. I don't want us to come back here. It can pump here. You would not be scared. We have an order block as well. These lows here.
¿Amaneció qué? Oh, yeah.
What? Hey, Zero, we can hear your voice, brother.
Pues ya sabes, el pinche weathers.
Me and you, brother. See how we still respecting it? See? It doesn't mean take your entry here. If you're a trade, you want to be paying attention to these. This stuff is the stuff that's going to be protecting your account. You're protecting your trade. All right? Let's have a look at Dixie just before we take out the low. Dixie should be pumping, right? So right now, looks weird. I just hope Dixie doesn't dump from here. It can absolutely dump from here and can find support at this volume imbalance. See? But in the next 1 or 2 minutes, I want us to move away from this area anymore. I don't want us to stay here. This is too long. This is taking too long. I expect price to displace and go distance and space and time. I don't know, I'm making stuff up. Distance and speed. 2 minutes. All right, I'm gonna give it 2 minutes. If in the next 2 or 3 minutes nothing happened, you close your trade here. Okay. Because from here to here, it's really not worth it. It's only 3 ticks. Are you willing to lose all the profits you made? How much profit? From here to here, that $260 with one contract. Are you willing to lose it all just because 3 ticks? No. But if you had contracts, multiple contracts, you would close most of them here, put stop loss in profit, a break even, or in profit, maybe somewhere around here, and let the rest run. Or if you have one contract, you'll be closing here in the next 1 or 2 minutes, right? Still respecting it. Just because I'm not in a trade, it doesn't mean I'm missing out. Oh, I wish I took the trade, right? No, it's because this repeats millions of times a day. Now I'm going to show you guys something new. This is called implied dealing range or implied swing, grading your swing. So I'm using not a swing low, but I'm using the NWG itself to the high. We are now in what? Right now we are in discount. So if you're shorting, you can only be shorting anywhere above this here. This is called implied because we're implying that this is the range. So you have no opportunity to pyramid your entries at all. Been watching. Oh, wait, did it take the low? No, it took the low. We hit our TP, guys. Well done. Let's go. Yep. Now we want to. We can easily come back to NWG now. Let's go. Now I told you guys, in the next 2 or 3 minutes, I want us to take out the lows. We did. It's great. Now, yes, took out its lows. What about Dixie? Did Dixie take out its high? Yes, it did. Yes, it did. Market is symmetrical. This is the time where you should be trading. Beautiful. ES took its low. Dixie took its high. Market is symmetrical. Awesome. Lovely. Beautiful. Beautiful. From here to here, about $300. We are looking for $500 with one contract. Market is allowed to come back. Why? We took out a low, so we expect a little bit of retracement back into an FEG. But remember, I always tell you, where's the 1 minute? The midpoint of this thing here, price is allowed to come back all the way back here, right? So let's say your stop loss is at break even. If you see price start closing above this area, you can close your trade. My charger. Alright, I'm back. Do you guys see a red box on my screen? Anyway, can you look CL again? See, price jumping from NW